What if I told you that the Federal Reserve isn't just risking a recession, it's choosing it? In an age of immediate gratification, Jerome Powell is playing a long game. While politicians and markets cry out for lower interest rates, the Fed stands firm. Why? Because sometimes the smartest move is the most unpopular one. Let's break it down. Chapter 1. The core argument, a long-term bet. Jerome Powell is choosing credibility over popularity, long-term stability over short-term relief. Why? Because inflation haunts the Fed. The scars from 2021 to 2022's runaway inflation, the worst in 40 years, still burn. He and his team see one central threat: stagflation, that toxic mix of slow growth, rising unemployment, and stubborn inflation. For central bankers, it's worse than recession. It's paralysis. So Powell has made his choice. Better a sharp, contained recession now than a decade of stagflation. He's not just managing interest rates, he's defending the foundation of trust in the US dollar. Chapter 2. Under pressure and standing firm. Washington wants growth. Wall Street wants rate cuts. Everyone wants quick fixes. But Powell isn't budging. Even as unemployment rises and growth slows, the Fed holds the line. Why? Because their models say this pain is less costly than letting inflation expectations slip. Powell's 2% inflation target is his red line. If he cuts now, he risks losing all credibility. And that, for a central banker, is game over. Chapter 3. Global impact. America sneezes, the world catches a cold. The Fed's decision doesn't stop at US borders. A strong dollar hurts emerging markets. Their debt becomes more expensive, their exports less competitive. It's a domino effect. In Europe, the ECB has started easing, but the transatlantic rate gap puts the euro under pressure. France, Germany, and Italy, ironically, might benefit. With inflation projected below 1% and lower rates, exporters like Airbus and LVMH may gain a price advantage. Sometimes adversity in one region creates opportunity in another. Chapter 4. Powell's legacy. Betting on history. What Powell is doing isn't new, but it is rare. He's taking the Paul Volcker path. Endure short-term pain to slay long-term inflation. Volcker crushed inflation in the 1980s and is now seen as a hero. Powell is hoping history will judge him the same way. His strategy: say no to short-term applause, say yes to anchored expectations. He's not handing out candy. He's pulling teeth. But only because he sees the infection beneath. Outro. If you found this explainer sharp and useful, share it. Too many people are still chasing headlines instead of reading the signals. Like, subscribe, and follow MacroNav, your market compass, where we unpack the macro forces shaping your world. New episodes soon. Stay informed, stay strategic.